Hello folks, and welcome to the channel. Today's topic du jour is 10 hacks and strategies to help you buy real estate in ridiculously expensive markets. Now, we've all probably heard at some point that real estate is responsible for creating the most number of millionaires out of any investment vehicle. With the price of homes these days, it can feel like your dream of homeownership is slipping away. The housing prices are getting absolutely ridiculous in major cities, and many younger generations are really struggling to get into the housing market, and I found myself there as well. Well, I'm here to tell you to keep dreaming, because real estate is possible these days, albeit with some hard work and some creative strategies that I'm going to teach you today. Gone are the days of buying real estate for $100 and a high five like our parents before us. I truly feel for our current younger generation because it is tough to get in, and it's tougher than it's ever been, but it's important to not allow yourself to slip into a victim mindset. It's important to realize that the game has gotten harder, but we still have to play it. Now, I'm going to share some strategies that helped me to buy real estate at 27 years old in one of the most expensive markets in North America, all while doing this as a blue-collar worker. See, I was working as a Red Seal journeyman welder in the Canadian oil fields so that I could save up enough money to buy a house with a suite, live in the suite, and rent out the larger portion of the house. After years of trying to save up enough money for a 20% down payment, I realized that the market was appreciating faster than I could save. Had I bought a house with only 5% down early on, I would have actually gained a couple $100,000 just in appreciation. Not only that, but the oil and gas industry that I worked in was extremely volatile, which meant that it wasn't uncommon for me to work for 3 companies within a year. Needless to say, the banks would take one look at my employment history and basically tell me that I had too many jobs within a year and they wouldn't lend me money. Over time, this absolutely crushed me, and I decided to persevere and come up with a plan to make myself as lendable as possible. Eventually, I was able to buy a property at age 27, it had a suite, and I started my journey as a landlord. The following hacks and strategies are all methods that I either considered or implemented in achieving my goal of purchasing my first real estate property. Strategy number 1, avoid taking on any debt and maintain good credit. Sorry guys, but you're gonna have to save that Lambo purchase for later. Taking on debt is one of the worst things you can do when you're trying to buy real estate. This will absolutely kill your buying power, as the bank looks at your debt to income ratio as a major factor when deciding how much money they're going to be able to loan to you. If you do have debt, there are some things you can do to help that, but generally the bank is going to lend you less money. If possible, try to reduce the monthly amount that you have to pay towards your existing loan, whether that's by extending the loan period, putting some money down to reduce the monthly cost. These could potentially help you get a little bit more money loaned to you for your mortgage through the bank. Now, if you bought an unnecessary asset, maybe like a fancy car, a boat, motorcycle, something like this, perhaps consider selling it. You can always get one in the future. It's really easy to get a loan for a car, but with a house, something that's going to appreciate, you might be better off just selling that asset, paying off that loan, getting a little bit of cash back even maybe for a down payment, and increasing your buying power. When looking to get a mortgage through the bank, they love to see long-term employment. Banks are extremely anti-risk, and they see long-term employment as stability. Number 2, don't quit your job, don't get a new job. Let me explain. If you've had multiple jobs within a short time frame, it will be really difficult to get a mortgage loan. This is one of the ones that I found myself getting called on multiple times. I'd go in, they'd tell me, hey, look, it looks like you can't hold down a job. We don't want to give you money. My advice is try to stay with one employer for at least 1 year. That's a decent period, but the longer the better. If you haven't hit a year, it's always worth going in and trying to get a mortgage anyways, but you are likely to get some resistance. It will also depend on what industry you work in. Some industries have more layoffs and are prone to less job stability, and other industries that are highly in demand and don't experience layoffs will be a little bit more favored in the bank. Think of jobs like, construction or any kind of seasonal work versus medicine, being a doctor, something like that. Now, starting a new job, even after having a long employment history with the same employer, is still looked down on in the banking industry when trying to get a mortgage. They look at it as you're going to a new job, you don't know if there's going to be layoffs, or there's just lots of unknowns for them. So they will be apt to not want to give you a mortgage if you just got a new job. For folks that are self-employed, most banks that I've seen will require 2 years of business income on record so that they can issue a mortgage. Lenders also seem to be stricter with self-employed folks, often blending, your first and second years together if you just started a business. If that first year was kind of slow and your second year is growing, you might kind of get less amount than as if they were just looking at the second year. So this can affect buying power if your business is growing rapidly and you kind of have to blend the average with the year before. If it's your goal to buy a property and you're self-employed, remember to claim everything, not for the IRS's sake, but for the ability to just increase your income overall and increase your buying power at the bank. Hack number 3, cosign. If you have a relative that has decent credit, maybe some extra income, and feels safe doing a cosign with you, this might be a great option to get your foot in the door. It doesn't even require them to put any money, although they are in financial risk if you were to default on payments. And remember, you can always take off a cosigner in the future. Another option is to go in with a friend. And if you do that, you're going to want to make sure that you get a rock solid contract, get it signed with a lawyer, and make sure that you really stipulate everything. You're going to want to know if one person wants to get out and one person wants to stay in. How do you navigate that? Are you going to buy the other person out? Are you just going to sell after a 5-year period, split the cash and go your merry way? Do you both want to rent the place out? Do you both want to live in it? Can you have roommates? You need to set ground rules. It's very risky, but it is something that I've seen successfully done through some of my friends. And if it's your only way to get your foot in the door, and you have a trustworthy friend and a ironclad contract, I think it is something that can be a great option. Hack number 4, buy a home that can produce income. So think suites, duplexes, multifamily homes. A lot of these are going to be more expensive because they do have these options to rent it out and actually create revenue. But what I found in my case is that the fact that my house that I first bought had a suite, I was actually able to claim some of the potential suite income as income in allowing me to purchase the house. So it actually added to my overall income, and the bank uses that. Some banks will use 50%, and some banks I've seen have even used up to 100% of that income. Usually what they have to do is a rental assessment. So they'll look at how much houses and suites in the area are getting rented out for, and then they'll take that amount to the bank and either give you anywhere between 50% and 100% of that as income. So if a suite is renting out for, say, $2,000 a month, you'll get $1,000 extra in buying power. Hack number 5, buy where you can. It's important to keep in mind that you might not always be able to buy in the region that you reside in currently. And that was the case with me. I actually ended up having to buy in a town about half an hour away, and that actually saved me a couple $100,000 in the purchase price. But over the period that I owned it, only 3 or 4 years, the place actually appreciated hundreds of thousands. Now, if I had not bought that place and I waited to try and buy one in the town I resided in, I wouldn't have got that appreciation. I would have been continuing to save to try and buy in that more expensive market. So I do think considering other regions is a tactic that can really get you into the market earlier rather than later. Now, of course, there are some things to keep in mind. Are you going to live in it, or are you going to rent it out? And there's considerations for both of those. Maybe you can't live further outside, or maybe you're looking in another province or state and it would obviously be impossible for you to live there. Then you have to consider, you know, are you going to get a property manager? Are you going to manage that yourself? You know, you got to vet good tenants and stuff like that. But maybe you can live in it if it's only half an hour away or so. Hack number 6, buy a fixer-upper. If you're somebody that's really good with your hands, or you have some friends that are contractors and good contacts, buying a fixer-upper can be a great option. A fixer-upper can often save you a ton of money on the purchase price. Now, you do have to invest some time and money to fix it up, but there's an outsized return when you do this. Now, there's a whole movement called the BRRRR method that people often do this. I might do a video on that at some point as well, but essentially you buy a house that needs to be fixed up, you put in the renovations, and then you go to the bank. They take a look and assess how much value you've created in putting this in. And what ends up happening is you can refinance the house because it's worth more now, and then you can buy another house, or you can use that extra money for whatever. You can rent the house out and buy another house and do the same thing. And a lot of people spend their whole career just flipping properties and fixing them and building a lot of equity that way. They call it sweat equity. Number 7, rent to own. So in the case of rent to own, at the beginning of your contract for your tenancy, you can negotiate a deal to have a portion or all of your rent over the course of your tenancy add up so that at the end you have a partial down payment or a full down payment to then take over the house. So this is a way to kind of have your rent work for you. And a lot of the time you can get kind of outsized returns here as well, because the purchase price a lot of the time is locked in at the start. So if you live in there for a couple of years, that place might have appreciated in value, and you're able to actually kind of take advantage of that price that you've had 2 years before. It's almost like an options contract in a way. Now, I don't know a ton about rent to own, if I'm honest, so I know there's more to the contracts than that, but it is something to look into and definitely could be a good option for somebody struggling to get into the real estate market. Hack number 8, a new build construction deposit. So, a lot of construction companies will start a big condo project, let's say, and early on they will take deposits, sometimes only 5, sometimes 10% of the total purchase price. Now, what can happen is you can get sometimes a much better deal the earlier you get in, because you're taking on, you know, a little bit of risk. You don't know what the end product is going to look like. And those developers want to get some cash injection early on to kind of sustain some of the operating costs that they have. Now, with what I've seen before, even just putting down 5 or 10% deposit and waiting maybe a year, year and a half, the appreciation in that place continues to go up. So you might have a condo you purchase it for $500,000, you put down, let's say, $25,000, and over the course of that year, year and a half, that condo is now being listed for $600,000 for new investors. So within that year, you've locked in the purchase of this condo, you've only put 25% down, you haven't had to pay any mortgage payments towards it, and the property's essentially gone up $100,000. That's something that you can then either live in, or you can flip it and sell it to the market once it's built. This is something that can really help you get some cash, and then maybe buy something even nicer. Maybe you get a house after that, or maybe you keep it and the property has just gone up in value without you having even lived in it. Hack number 9, alternative lenders. So banks are not the only institution that will lend you money. There's all sorts of alternative lenders. You can go through brokers and other methods as well to find different, I guess, mortgage contracts. And a lot of these you want to review carefully because there is a lot of things that can be kind of shoehorned into these contracts, but you can always find lenders that are willing to take on a little bit more risk, usually in return for a slightly higher interest rate or some other trade-off. In your particular position, it might be advantageous for you to take on something like this through an alternative lender. But maybe not. I just want to bring out some options there so that everybody knows what can be done. Always be very careful when taking on any sort of mortgage. Make sure you read the fine print and make sure you know what you're signing on to and all the terms, all the small print. Hack number 10, earn more money. Now, of course, earning more money is an obvious one, and it sounds really kind of shitty to even say it. But if you think about it, you might be able to actually come up with some creative ways to earn more money. This could be as simple as asking for a raise at work, getting a side job somewhere else, selling a large asset, whether, earlier we talked about selling a car, selling a computer, selling this, selling that. You can sell a ton. Starting up some sort of business. Not only will earning more help you with getting qualified for a mortgage, but of course it's going to help with the down payment as well. So if you focus on how you can earn more, you're going to absolutely be able to increase the chances of you being able to get a mortgage. Now, if you are trying to purchase a house within the foreseeable future, you might want to look at some jobs that pay a lot of money with a short amount of experience. In my case, that was welding. That's the whole reason I went to the oil fields and worked 12-hour days, lived in camps, and just was able to save up a lot of money because I didn't have a lot of expenses living in camps most of the time. And I made good money, had good overtime and a good hourly rate because we're in the trades and they actually pay pretty well for not a ton of experience. Thinking about some of these and setting yourself up for the long term can be a great idea. And keep in mind that whatever job you get, it doesn't have to be forever. I do a completely different job than I did when I was saving for my house at first, nowadays. Now I'm a project manager for a tech company, and I've had many different jobs in between. So find something that is gonna pay you well, that you can stand, and realize that you don't have to stick with this job. And if it makes you miserable, don't do it. It's just a suggestion that you can think about how to leverage how much money you're making to set yourself up for the future. All right, so I hope you enjoyed this video on my 10 hacks and strategies to help you buy real estate in a ridiculously expensive market. If you found this video helpful, I'd really appreciate it if you could subscribe and please like the video, leave a comment, and let me know, are you looking to buy real estate? What kind of issues are you running into? That's it, that's all. Have a great day.